Hello and welcome to Portfolio Matters.
Hello.
In this share talk, we will be discussing the small gold recovery company, Goldplat. But before we do that, Richard will read the disclaimer.
Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. A full disclaimer can be found at the end.
Thank you, Richard. Okay, so what is Goldplat? Well, Goldplat's a very interesting gold company. It used to own some mines. And frankly, the mines were not profitable. It managed to pull off the remarkable feat of losing money on its gold mines in 2019. But it's since disposed of them. It's disposed of the one in Kenya. And it's now concentrating on its gold recovery operations. And these are really interesting. So what it does is it takes mine waste and other waste from other gold miners, and it extracts the gold from that. So, for example, the wooden struts used in gold mines, particles of gold become embedded in the wooden struts.
Right.
And Goldplat will buy the waste wood from the other gold miners and then extract the gold from the wooden struts. And it does quite a lot of these kind of different like niches, waste products. So it's a sort of waste recovery company with operations in South Africa and Ghana.
Right.
Now, I should say that I own this company, having bought it recently. And the reason I'm very interested in it is that it's very cheap. The shares are very cheap, but the question is, are the earnings they managed in 2020 sustainable? So positives, it's very cheap. It's on a cash flow multiple of 4.2, and it's a sort of turnaround situation in that they have now decided to concentrate just on the gold recovery operations. Subsequent to the annual report in January, they announced the sale of their unprofitable gold mine in Kenya for, I forget now, but just over £1 million. But the £1 million was not in cash. Essentially, it was in shares in this new venture which would take over running of the mine. So what Goldplat have done is they have got rid of the liabilities relating to this mine with the possibility of some money if the new owners can make some money out of it. Also, it can claim to be ESG in that what it does is it takes mine waste from other companies and recovers the gold from it. And you hear on the chat rooms lots of talk about it being ESG. It's something we will question as we go through this presentation and you look at a few photos. Now, the Ghana operations are the problem, but they were profitable in 2020. The big question is, can that continue? And the other thing is that it has gold assets are worth 125 million in a company whose market cap is 10 million. The question is, are they recoverable? So what's the TSF? It's the tailing storage facility. So they buy all these mine waste from the other companies and they've piled it up in the tailings storage facility. And they've done an analysis of all the gold in the tailings storage facility. And there's gold, uranium, and something else. And all that adds up to 125 million. Now, when you think of what is going to move the share price, if they can extract the value, then the value of the tailings are worth 10 times the current market cap of the company. However, currently they don't have the ability to extract that the gold from those tailings. And they are talking either about having to invest in the site so they can process them, or get a third party in, which will obviously be a lot less profitable.
Yeah.
So the negatives. Is the 2020 profit sustainable? Essentially, their Ghana operation takes mining waste, was set up to take mining waste from other mines in the region. And what happened in 2020 was they managed to sign 2 agreements with mines in Mali, one of which was ongoing and one of which was a one-off. But prior to that, the Ghana operations were unprofitable. Essentially, they couldn't get enough feedstock.
Right.
So what you have to believe going forwards is that they are going to establish relationships with mines in the area to provide them with feedstock. So we're talking Mali, Ivory Coast, Burkina Faso. And I mean, it's a very unstable region. And is this sustainable? Will they be able to do it? To give an idea of how desperate they are, they've actually opened offices in Brazil and Peru to try and get tailings waste from South America, which seems quixotic to me. I mean,
yeah.
Shipping waste ore from across the Atlantic. I mean, I don't know how that can be remotely cost effective. In Ghana, there is also conflict with artisanal miners. So there's various mines which are in operation where they would take over the recovery of the gold from, essentially picking over the waste are these artisanal miners. And so there is conflict with them, and that has to be essentially managed.
Yeah.
The other thing is, if there
quite a lot of fairly significant issues in there, aren't there, Keith?
There are, but it is dirt cheap.
Yeah.
It's not. You don't get something for nothing.
Yeah.
The other thing is the share price has gone up very substantially already this year, from a low of 3p. I mean, frankly, the reason that this is on my radar is that when I was looking to buy gold miners early in the year, it had a market cap of about 3 million, and I thought it was far too small and liquid to get involved with. And sadly, now the share price has, trebled. It's hit my market cap minimum. I'm looking at it, and that's kind of taught me a lesson, actually. Although obviously you can't look at everything.
Yeah.
The other thing I'd raise is, if Goldplat becomes marvelously profitable, will the gold miners just start to do this job themselves?
Yeah.
So, Goldplat, share price 8p, market cap 14 million. Now, the net cash flow in 2020 was 3.4 million. So this is extraordinarily cheap.
Yeah.
Okay, so it's now, as I said, it's got gold recovery operations in South Africa and Ghana, and gold mines in Kenya, which is now discontinued, and a sale has been agreed, and Ghana. So what does it recover? Well, as I discussed, it recovers wood chips from the supports in underground mines,
right,
steel and rubber mill liners,
yeah,
mill grease, so bits of ore get stuck in the grease and they recycle the grease and get the ore out.
Okay.
Fine carbon. Now, this is something they use in gold mining and not in platinum group metal recovery. And essentially they use activated carbon, and they recycle the activated carbon. And when you in the activated carbon waste, which Goldplat take, you can get very high concentrations of gold, to 500 grams a ton.
Right.
When you think that you mine gold at 1.5 grams a ton. That's very good. The other thing is Vlei material, which is a South African word essentially for clays, other material which gets into the mine processing part and can be contaminated with gold.
Right.
It also cleans up the waste from disused gold mines, so rock dumps, etc.
Okay.
So let's have a look at a few photos. So these are the mill liners, which they shot blast to get the gold particles off. That is the wood chips.
Mm-hmm.
Now, when people talk about it being ESG, I wonder, this is the tailing storage facility. Doesn't look terribly high tech, and they do have to spend money each year shoring it up. You look at it and you think, wouldn't be very ESG friendly if their tailing storage facility started flowing into next door land.
Yeah.
Now, next door is an abandoned open pit mine, and their plan is they process the tailing storage facility and they stick the waste after they've processed it into the open pit mine.
Right.
But they need to get permissions for that, which they haven't yet got, and they also need to invest in equipment. This is the state of the equipment there, and this is a proper old school, old manufacturing facility, not high tech. So, revenues. You'll see that last year the operating profit shot up to 5 million.
Yeah.
Okay. And they have very little debt. They've got net cash, and the return on capital employed also shot up last year to 29.3. So the question is, can they keep this going?
Yeah.
So 2020 numbers, you'll see here that the gross profit last year was 7.3 million. Operating profit before financing costs, 6.3 million. Okay, so given the market cap is 14, I mean, this seems an extraordinarily cheap company if those profits are sustainable.
And the do you know when is their year end, Keith? When was 2020 year end?
I believe it was March.
So we could say, in all probability, that the average gold price for the current year is going to be maybe 1850, something of that order, which would all feed through to the bottom line, because obviously their costs won't be going up in line with the price of gold.
Yes,
it does.
Absolutely. So the tailing storage facility, I've just shown you photos of, is now full.
Right.
But it contains, they estimate, 82,000 ounces of gold, which is a hell of a lot. Actually, this is where, so when you look at the market cap, basically the value of the tailing storage facility is almost 10 times the value of the company as listed on the market. But as I've discussed earlier, they actually need to find a way of processing it. So there you go. It's gold, silver, and uranium. So $162 million.
So it seems to me, Keith, that if they were a continuing operation without requiring any particular change, there would be an incredible buy.
Yeah.
There are doubts, the question marks over their being able to process all of the material that they have and that they get. And there is a question mark about permissions. And if they manage to successfully resolve them, then they will actually become a profitable company with a very low earnings multiple at a low market cap. So it's really the seminal point of this investment is, can they resolve those two big issues, the permissions and the operating facility?
But also, Richard, actually, is Ghana, I think, is the big question.
Right.
So Ghana, they've lost money on their operations in Ghana historically. But if they can forge relationships with local mines so that they get enough feedstock for it to be profitable, then this becomes a very different company going forward. And also, now they are specializing in waste recovery. The possibility is that they would then open new sites elsewhere. For example, we talked earlier about how they'd opened these offices in Brazil and Peru to try and source material across the Atlantic, and which just seems ludicrous to me. I mean, surely if they have enough money and there's enough of a potential resource there, they should be opening operations in Brazil.
My feeling is that an existing miner is unlikely to want to recycle these things because they need different kit. They need to set up a recycling shop, and it's not really worth the capital investment. And I guess if the price of gold goes up, rather than them saying, well, we'll recycle it ourselves, they're more likely to start charging for the recycling material on the basis of recovery or something of that nature.
Yes. Well, they do. I mean,
the
Goldplat has to buy their material. Goldplat has to buy the waste off these other companies.
So the price would go up rather than them doing it themselves, I suspect.
Right.
Yeah.
So, as we discussed earlier, Ghana's a problem. So in 2020, what changed was Ghana had two new contracts, one of which was recurring, one of which was on-off. And so one-off. So the revenues rose from 4.4 million to 8.9, and that tipped it into profit of 729k versus a loss of 536k in 2019. So, you know, it's over 1.2 million more of profit. So essentially, they need to keep that up going forward.
Yeah.
The other thing I'd raise is there's a working capital issue. And when asked in an interview what the CEO intended to do with the cash in the company, he talked first about paying off some expensive financing arrangements. So the trouble is, it takes them between 60 and 210 days to reprocess material, but they have to pay for it up front. So they have a working capital problem. So the discontinued operations, they're basically getting out of all their mining operations. They've closed down the Burkina Faso facility, which frankly never did any business. The Kilimapasa mine in Kenya, the sale has been agreed. Although the shares, the consideration is in shares in a new entity, but there are no ongoing obligations. And as you can see, historically, it's made large losses. And one of the reasons the profits have improved is just they've got rid of this, essentially. They also had a joint venture gold project in Ghana, and they've agreed basically not to extend the license, and they're trying to find a seller.
Good. So they're really trying to exit their non-profitable businesses and focus entirely on the reprocessing.
So what are they going to do with their cash? Well, they're intending to expand the operations in South Africa, repay a debt facility of 2 million, and then after that, they would consider buybacks. Dividends as opposed to buybacks, because they don't want to reduce the already illiquid shares further.
Right.
So in the going forwards, there's no need to invest in mines anymore. So they'll prioritise or claim to prioritise cash to shareholders. So in summary, they're repositioning for a company for growth in the gold recovery space. They're looking to expand into platinum group metals, but those are lower margin, simply because of the way platinum is extracted was different from the way gold's extracted, which means that less waste is produced. If they can forge some good relationships in Ghana, then this company will be very different in profitability going forward. South America, question mark.
Yeah.
So share price, you can see, having dipped to like 2.5p, is now at 8p. So it's trebled over the course of this year. You know, and previously the share price had been up to 15p, but as the Kilima Passa mine was consistently loss-making, the share price has come right off.
Yeah. Very
Okay, so in summary, this is not without its risks, but it's a turnaround situation, and it's not your average gold miner. And I think there is a margin of safety here. So the yield is very low, and when you look at these value situations, you have to think of what is going to be the catalyst to unlock value. And to me, there's a very clear catalyst, and that is, can they start reprocessing all the gold in the tailings storage facility? If they can, profits.
Yeah. Good. I think that's a very interesting presentation, Keith. Thank you very much.
Okay. Thank you for watching. Goodbye.
Goodbye. Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.